the FX method. The FX method is a different methodology, another approach to trading, which works with automated systems. As Einstein put it, I couldn't tell it better. If you're doing the same thing over and over and you expect different results, you're insane. Sorry to say it like that. So we invite you to consider to do automated trading. We're not saying you need to do the education with us. We're not saying you need to open an account. We are just saying you should consider it. You should consider changing the way you are trading if you're not being successful. Because there might be something that you can improve or that you can do differently. And believe me, automated trading is a completely different thing. And the world is going in this direction. It's not just a trend, it's a massive thing. 90% of the stock market, Wall Street, is run by high-frequency robots, actually. And it's not only the volumes, the trading desks all over the planet. I'm speaking now with professional traders in different parts of the world, such as Kenya and Mexico, different parts of the world, and the world is going in this direction. They're really looking for specialists in automated trading, and they're looking to reduce their trading desks, and robots are really getting very, very, very strong. So I think as a retail trader, you should consider it seriously as a possible choice for you. Okay, so we'll explain very quickly what is manual optimization. Many of you already know that. You were to Mortgage several times, some of you, or at least one time. And I'm not going to get into the slides one more time. There is some videos in our channel. I can give you the links. So just very quickly, real quick, because this is actually a recap from another webinar. So you need to understand that the trading system has a series of parameters, right? Like, for example, we're going to optimize today a stop loss and a take profit. That's two usual parameters independently of the trading system family, right? You will always have a stop loss unless you're crazy. So this is a parameter that you're going to have always. But you're going to deal with the stop loss very differently. So the thing is that the more parameters you have, the more complex the optimization becomes, right? And I would say a good number of parameters, it would be around 12, 10 parameters. When you get systems that are over complex, like have 50 parameters, such as, for example, FabTurbo. FabTurbo was a very successful trading system, and once we checked into the code, it had like 74 parameters. It doesn't make it necessarily bad, but it's over complex, and the optimization becomes really very, very difficult. Once you have so many parameters, you need to understand that there is not just one single solution for an optimum. There is not just the best stop loss or the best take profit. There is just a combination of solutions. So you should be always looking for more than one optimum. Okay, you should find different solutions. The other thing is that it's very difficult to achieve is that you will get the absolute optimum. Just get one that is good enough to trade. Okay, and trade it. Don't wait for having the perfect optimization. Don't wait for being too perfectionist. Just get a good solution and put it into the market, at least in demo, and trade it and see the results. I don't want to get much into the next slide. The thing is that we do this search through what we call the mathematical theory of optimums. We use search algorithms. We use ways of looking for optimums, because if we combine all the possible combinations in a trading, usually we get quintillions of combinations. And as you can imagine, a 5 followed by, what is it, a quintillion, 24 zeros, I don't know, I forgot. It's just a very long number. You cannot calculate so many combinations. So we need the help of what we call search algorithms, and this helps us to be faster in a search. It doesn't mean we'll get the better optimum. It just means we will be faster in getting an optimum for our trading system. Okay, so what we want is speed. What we want with search algos is to get a quick solution. It's not the best solution, it's just the fastest solution. We want to trade, we don't want to be calculating all our life. Okay, we want to be effective. That's the main point. So we want solutions that are good enough to be traded. So the search algorithm which I'm proposing to you is a manual algorithm. It's called in the literature, in the professional literature, the hill climbing algorithm. I call it HC, hill climbing. And you will see now how it works. I will do it on the robot. Many of you saw it in One More Gate, and we will have another presentation in March. in London, and you're welcome to join us for free for a full day of automated trading. So the main thing you need to understand, there's two parts to this. There's the trading system and there's the set of parameters. And actually the next picture shows it very clearly. It's like having a lock. The trading system is the lock. The lock is great. It may be very robust, very metallic, very, very strong. But if you don't have the combination, if you cannot open it, it's no worth. So I would say that this here is the trading system, okay, the rules of the trading system. Whatever it is, just take a moving average, and whenever it crosses the price, enter the market. If it crosses upwards, do a buy trade or whatever. That would be one of the rules, right? The trading system is the whole set of rules, and this is the results of the parameters. This is what we're going to search for today. Okay, so we want good parameters, and the whole set, this is, for example, the parameter for the variable number 1. This is the parameter for the variable number 2. This is the parameter for the variable number 3. And this is the parameter for the variable number 4. In this case, the set that opens the lock is 0000. That opens the lock, which is a very stupid set of parameters, right? Because everybody could find out that one. And these 4 numbers, it's a matrix actually. It's what we call a set. So what we're looking for in MT4, they call it sets, right? Is to look for good settings or sets that the locks that really unleash the power of the trading system and bring money in the real market. And this takes a lot of expertise, a lot of experience, and this is just an intro webinar on how to get there. Okay, so the thing is that we just want a good settings. We just want to open the lock, but you should know that this lock can get opened with many different combinations. There is the metaphor is finished there, because in trading there is not just one combination. There's many combinations that can work, and they may depend very much on the conditions of the market. Okay, so we're not looking just for one combination. We are looking for robust combinations, and we're looking for more than one of them. Okay, for more than one of these settings. I don't go in detail into the slides because it was on another webinar, which is already in our channel, and you can just watch it. I'm going to put the link afterwards here in the chat, and just watch it. And if you're watching the video in the channel and you weren't in the webinar, you will be seeing, it's 2 videos actually on hill climbing algorithm in our channel. Just watch for those in the channel and just watch them. Okay, so the thing here is what is more important, the trading system or the parameters? I would say they're both important, but if I would need to choose, I would choose the settings. Okay, I have seen very bad trading systems, like such trading systems like I don't know, a MACD with a Bollinger, which is an absurd trading system, and depending on the parameters, you can get at least something out of it. Okay, so the main thing here, or what we found out in our investigations, is that we need the right settings. Many people put the emphasis on the system itself, on the rules, and I would say in our case, in the FX method, we put the emphasis on the settings, on the results, okay, on the parameters that make us earn money. Okay, so now we'll start practically. That was like a small intro, a theoretical intro, and now I'm going to go to the platform here, which I already have opened. It's the platform of AxiTrader. We collaborate with AxiTrader. We are very happy. It's FCA regulated. They have great offices in 110 Cannon Street, right down in the city, and we trade there. Okay, so this is the platform. It can be a demo or a live platform. And what we did basically is, yes, we started here the strategy tester. You see here, view, strategy tester. Now you don't see the back tester. And now you see the back tester. The other day, yesterday, we downloaded historicals. If you're watching the channel, just watch the video of the historicals. I'm not going to get into that today. And I just took the robot that we give out for free once you open an account with AxiTrader and you fund it with £2,000, £2,000. That's the minimum to get this free present from us. Once you fund it, you send us a screenshot. You get this quite good robot for free, and it's actually 2 robots in one. And what we're going to do today with this robot, it's just an example. If you don't have the robot, don't worry. You may have another robot. The sequence is the same. Just apply it to the robot you have, or try to find a free EA somewhere And if you want a good robot, just open the account. I'm going to explain this at the end because I usually don't sell much in my webinars, only the last 2-3 minutes. Okay, so I want to give you value, not to explain you about the offer right now. So here is the robot. We chose this robot, which is the robot we give out, T2F, that's the name of it. And you have more to choose from here. Usually you have these 2 free EAs, which are absolutely no worth. In MetaTrader, which is the MACD sample, which is just a simple MACD. Believe me, with MACD just alone, you cannot earn money. And that's a moving average cross, just crossing 2 moving averages, and you don't make any money either with that. But you could try with those, okay, to do the manual optimization. I chose the euro dollar because I have the historicals fully there, 14 years of historicals, and I chose M5. The robot works better on M5 than on M15. On the 5-minute time frame, it's a trend system, but it's more accurate on the M5 time frame. And I chose a very expensive spread. This is equivalent actually to 1.7 pips. And if we go right now to the market watch and we watch what's the price right now, what's the spread for the euro dollar in AxiTrader right now, actually there's still the market open, but it's close to close. It's 472, it's 1.3. You see the difference between 72 and 85 is 1.3, but I chose 1.7. It's the 4th digit always, right? The difference between the last 2 figures and divided by 10. So 90 to 75 is 1.5 right now. You see, I chose 1.7 because I calculate slippages, and just in case the robot, the system doesn't go exactly the price I want, because in the real market you have slippages and stuff like that. So I put a bit more expensive spread than the average on the euro dollar, which would be 1.0, 1.1 in the daytime and maybe 1.5 in the nighttime, but on some peaks we'll have 2 pips spread. So I want to cover myself in this back test. I chose the open price method because I did some testing before if I can do it on the robot, right? And I choose a very, very long period of testing. That's very important in our way, the way we work, which is from 2007 till today. You would say that's a lot of years. Yes, it is. It's over 9 years, I believe. And that it's done on purpose because we want really to look for a long pattern. We want to look for a trading system that worked for a very long period. And if it happened in the back test, there is more chances that it will happen in the future, right? If many people are lazy and they just back test for a year or for 2 years, and you know what? It's lying to yourself. You don't have enough data actually, and what you're looking for is that you have a very many candles and that you are really secure that there is a chance in the future that the trading system will work similarly. Then I go to the parameters. We have in this robot 2 robots in one. The first robot is a scalper. I'm going to turn it off now because I don't want to optimize this robot right now. Okay, and I'm going to turn on only the second robot, which is a trend system. Okay, that's very important. In the other video, we were working with the other side of the system. It's 2 robots in one, so I'm going to turn off the scalper. Then I'm going to go down here, and I'm going to go to money management features, and on this robot, if you're trading in the UK, you have spread betting, right? So you would be reading this as pence. I would be having a bet of 26 pences per pip, right? If you're trading in mainland in Europe, you would be talking about lot size, right? So you would be having 0.26 lots. This means you would be buying 26,000 euros each time. One lot is 100,000, right? And as we're doing euro dollar, this means 100,000 euros. So that divided by 0.26 means every time I'm buying 26,000 euros with leverage, right? If I'm trading with lot size, if I'm trading with spread betting, every time I earn 1 pip, I'm going to earn 0.26 pence. That means every 4 pips, I'm going to get £1. Okay, I'm just explaining both ways because some people are trading on spread betting and some people are not trading on spread betting. Okay, great. So if that's not clear, stop me because I'm running very fast. I know there's new people here. I explained the bet size very quickly. I explained the 2 robots in one. And what we're going to optimize now is the parameters here. Okay, which is these values of the trading system, and we're going to tweak it together till we get a better optimum, okay? And we're going to do it practically, okay? It's not going to be a theoretical webinar, okay? So please stop me now, make any questions if there is some doubt. Otherwise, I will continue further. No questions? Oh, give me some feedback. Everything clear? Not clear? Any feedback? Please. Otherwise, I'm going to start mentioning you. Abby, I think you're new to the webinars. Great, Russell. Perfect. Paul Pierre, Faisal. Okay, I cannot give the rules, Faisal, of the system. I'm sorry. I give the system. I'm going to describe it, but not in detail. Okay, otherwise you can code it yourself. I'm going to give you a little bit of the rules only. Okay, so what we do now is the first thing I do is I check the system in visual mode, and that's the beauty of MetaTrader, that I want to see how it enters the market. I did a back test before. Okay, let me start doing a back test. Okay, the first back test, I just put this lot size. I will explain why I put 0.26. I just leave the parameters that come by default. I have a stop loss of 33 pips. I have a take profit of 550. That's very long. You may say, wow, that's really a good ratio. Of course, not every time I'm going to catch 550 points, right? Only when I have a very long trend, right? And the stop loss is very short because usually in trend systems, the stop loss should be really tight. Okay, I have a trailing here, maximal trailing 16.5 pips, minimum trailing 1.2 pips. I have your trailing, basically all these parameters, the majority have to deal with the trailing. This has to do with the trailing, 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 this, and this. Because the beauty of the system is the trailing, and you will see it now in action. Okay, so I'm going to do a first back test over so many years, and as it's open price, it's going to be really fast. I'm going to go to journal. It's already working. It's modifying. It means it caught some trades with a lot of trailing stop that was moved. Every time it modifies, it's moving the stop loss. You see? And that's the graph over 9 years. That's the result. It's more than tripled their account, right? No, almost tripled the account. I always do the back test in dollars, okay? Even if I'm in the UK or in Europe, I will always do back test in dollars because it's the main currency in the foreign exchange market, and I don't have conversion problems. So what I'm reading here, first thing, is that I invested 10 grand over 9 years, and I made a 277.94%. If I move the comma twice, I get percentage. That's my drawdown, 22.79%. That's my risk, 0.92% per trade in worst case. And on average, I'm risking 0.84%, right? Because I'm risking $84 for every 10,000 capital, which means I'm risking very little. And in the worst case, it had a streak, a maximal consecutive loss of 18.06%, right? So that's low profit for you? Okay, great. Find me a better system, and somebody's saying here it's low profit. At 277% over 9 years is making up for a 30% yearly on average. And if that's low profit for you, you're in the wrong place. Okay, so we continue here. Okay, because you said low percentage. Faisal, you need to explain yourself better in the chat. Okay, so the thing is, that's the average thing I saw, but I want to watch just how it trades. Okay, this is the first thing. I'm going to catch a good trade here, for example here, right, on the 27th of May of 2008. If you may remember, what was happening for the smart guys here? What was happening in May? No, it was actually 2010. I confused. Okay, I'm going to take just this date. There seems to be a very good, it was in 2010, it was a Greece crisis. I confused the year. Credit crunch was actually 2007, and the Lehman Brothers was actually in October, not in May. So whatever. There was a big trend there happening in the euro dollar, and we caught it with a robot. I just want to show you what's the visual mode. We click here on the visual mode, and with this we select the speed, right? And with this we can pause. So what we're going to see now is what the robot is doing, candle after candle, right? We can select the speed. We are now back to the past, not back to the future, right? And we're watching what the robot did in May 2008. I'm waiting for this trade to enter the market. There it went. I'm going to pause it. We have a stop loss of 33. If you don't like white, I can put it in, black. I can put it in another color. I don't know if you see it well in your screens. Tell me. Otherwise, I change it. Do you see it well? I can change the colors here. Do you prefer that? Looks okay. So who is for black background? Vote. And who is for white background? Let's decide quickly. Black. 1, 2, 3, 4, 5 blacks, 3 whites. Okay, so we stayed in black. And a lot of people are not voting. Okay, great. So there we go. Green on black. There we go. Okay. So what we have here is exactly what we saw. We entered here. We have a 33 pips stop loss. You see that? And if we go downwards, very far away, we have a 550 points take profit. What it means basically, that's the maximum range. That's my fork. I explained this in mortgage, right? In worst case, I hit 33, I exit the market, and in best case, I hit 550 points, I exit the market. But the system is an intelligent system. It's going to move, and it's going to have additional exit rules, right? It has actually position management. So let's see the next candles, what happens. Every candle is 5 minutes, right? I can put it faster, right? And you will see when there's a high volatility moment, the stop loss is going to be moved suddenly. Only when there's a big candle, okay? When there's an impulsive candle that it's going to move the market, I'm going to squeeze it a bit so we see it. We're already 1 day in the trade, right? We're already in the winning side. You see that? But the stop loss is still in the losing side. Some manual traders would be already at break even. That's a big mistake because you really need the trend to be confirmed, okay? It's active, but it's not the usual trailing stop. It's a very good trailing stop. You will see that. Okay, I'm going to do it a bit faster, not too fast. Oops, I lost the screen. We're still with the same stop loss, you see, because there was not really an impulsive moment which justifies the moving of this trailing stop. It's very unusual, and I love this system. It really works quite well. So let's wait a little bit. It's going against us. Back in favor. That's a trend system. The good thing is we are floating in the positive, right? Right now, if we would close, there you go. You saw the trailing stop, it moved twice. Did you see that, guys? You can see it here. It was moved. It entered the trade at 8:25. 1 day after and 5 hours, it moved the stop loss, you see. And that's the beauty of the visual part of MetaTrader. You could put here your template, how the trading system is done, right? And you could watch how everything is moving, the trailing stop is moving, how the system is exiting the trade. It's really the beauty of automated trading systems, right? So right now, whatever happens, we are in earnings. You see that? Many of you have this robot, actually. Many of you here in the list, Paul has it, Mr. Cole has it. Everybody who opened the account and funded. Ben has the robot, finally, I hope. Did you get the robot, Ben? I think Olga sent it to you. You had problems with the pen drive, she told me. Okay, so the thing is, it will secure your earnings, but not immediately. Many people put the trading stop too early, and it did like this. It had an original stop loss here, and the entry point was 57.76. You see that? So we secured only 6 pips, but still, it's an earning. So whatever happens, we can sleep calmly, and this trade can be in the market 5 days, 5 months, 5 months it doesn't stay, but it stays many days. Okay, let's continue watching it. And another move of the trailing stop, you see, and it's almost to technical levels, you see. It's a very intelligent trailing stop. I love it. It's moved by ATR. Yes, exactly, risk-free trade. So it's a very lovely system, especially on the euro dollar. And later on I may recommend you other pairs. You can trade it, and we made very good trades on the New Zealand dollar this month. You know there were many news on the Kiwi this month, right? Okay, so let's continue a bit faster because I just want to show one trade and continue to the optimization. So this is the first thing. You need to watch the trades. Another. You see? You see how it's occurring step by step, but slowly. It moved the trailing stop like 10 times, 12 times. You see that? Another time, and it doesn't move the trailing stop in jumps of 10 pips. This is the most idiotic thing I've ever seen. There you go. It went against the stop loss, and this trade made us 7% in one trade. It's not happening every time, okay? But you secured your year, right? You already made more than any bank, right? And it doesn't mean every trade is going to be a winner, okay? It just means we were very lucky. We caught the trend. We were securing very well, and this is what we are going to optimize now. So we talk the same language, and you understand this is a trend system with a very smart trailing stop. Okay, so it moved the trailing stop in different jumps. Sometimes it was jumping, you see it here. Sometimes it jumped here only, this is 6 pips, right? 4.8 to 4.2 is 6 pips difference. It only jumped 6 pips, and here it jumped 8.5 pips. You see that? From 6.4 to 4. I'm very fast in my head, sorry. I'm not taking any calculator ever. Okay, and it moved 8 pips, the trailing stop. And if I have a very impulsive moment in the market, it may move it suddenly 15, 20, 30 pips. Okay, it depends very much on the volatility. And this is what we're going to optimize now. So if that is clear what the system does and how it works, I just showed you one trade. If you have the system, you can do the same at home. Watch how it moves the stop loss, really, and it's really a beauty. I'm going to stop now the visual mode. I'm going to stop this. I don't want the visual mode anymore. I already saw how it trades, trade by trade. I just watched one trade, but I could watch as many trades as I want. And I'm going to go back to 2007. And the first recommendation I'm going to give you, which is in the slides now, it's in the next slide actually. If you're using a trend system, I would be even more demanding. Yeah, I would be even more demanding. This is the next slide. And I would ask that you optimize starting in 2005. You would say, wow, but that's even more difficult. Yeah, exactly. That's why we do it. But this actually is explained in our paid education. If it's a trend system, we will deal with it differently than if it's a scalper. So I'm going to be even more demanding, and I'm going to add 2 years of backtest to it. This is the first thing I'm going to do. So I'm going to be more demanding. I'm going to start in 2005, which is pre-crisis years. Okay, why they were not so trendy, and I want to see what the system did in the bad years, and it still earned money. It was not so efficient from 2005 till 2007. You see that? This is actually 2005, January 2005. I just see the graph. I know exactly that's the beginning here. It's 2007. I can even check it actually. I can put my cursor over here, and I will see the date, and that's actually to December 2007. That's May 2007, right? 2007 was not a good year for the system because it was not a trending year for the euro dollar. And this is 2007, okay? And this is 2008. And you know what happens? When there's big crisis, the system loves crisis, like any trend system, right? We have here all the bad years, economically speaking, right? 2007, sorry, 8, 9, and 10 is where it made most money. And like 2012, when the market was sleeping, not so much sleeping, but I mean in the Forex market there were not so many trends. At least it doesn't lose my account. So that's also how you read the back test, right? So it's okay, I put 2 years and it's not losing my account. First thing, we're going to get to this later. So what I'm going to do now is like ask myself, what about if I manage to get a better result? So I'm going to optimize. And what I'm going to do here is I'm going to decide to start at the very bottom and optimize from the very bottom to the very top, or I'm going to decide to start at the very top and optimize to the very bottom, or I'm going to decide to start at the very middle if there's 12 parameters, or I don't know how many, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 parameters. 5 is the middle. I'm going to start with a moving average, and I'm going to start to the top and then to the bottom, or otherwise from the middle to the bottom and the middle to the top. Why these 4 possibilities? Because we tested everything. We did investigations about this on a lot of systems, at least 60 systems, and we found out that for this way to search for an optimum, the best solutions were either start at the bottom and go to the top, or start at the top and go to the bottom, right, or in the middle, and the worst was allegorically. If you would start with this parameter, then this one, then this one, then this one, without any order, you would get a very bad result. Okay, this was our investigation. And the book says actually you should start with stop loss take profit, which book? Robert Pardo and other books that talk about optimization, but I disagree completely. We found out you don't need to follow these specific orders, like they say entry rules, exit rules, filters. Not true. You can just optimize from top to bottom, and that's what we're going to do. So here we have a take profit of 550, right? And we're going to say, okay, let's try to find a take profit which is shorter, right? I'm going to make the jumps in 5 pips, and I'm going to go for a longer take profit. This is going to take a little bit long because it's a lot of steps, and I'm going to try, if I shorten the first thing is I do a benchmark, which means a back test, and it made, including 2005, it makes 315%, right? Every time it enters the market, it makes 36, which is good money actually. And this is my drawdown, so everything is okay actually. And I'm going to just try to find another optimum on the take profit. I go to journal, optimization is started, everything is fine, and I'm going to also have the useless results. And you see, well, I was earning 315% on the take profit of 550. If I reduce my take profit, right, I earn only 222%. I'm cutting down my earnings too much. Of course, I knew that, but I need to do it. I need to check. And here it starts to become interesting after 150 pips take profit, right? 165, 155, you see? And that's obvious because we are in a trend system, and if I just only go for 120 pips maximum, that was the fork originally. You remember, it was like either 33 losses or 550 in earnings. 120 is not a good, it's too short earnings. I'm cutting down the earnings too much. And what I'm watching now is I can order here by profit. Don't worry, the video is recorded and it's going to be uploaded in YouTube. You can watch it as many times as possible. I only have one more half an hour, and it's a very complicated process, and if I don't manage, I'm going to do an additional webinar, okay? But there's a lot of juice in this optimizing thing, right? So you see, it tells me a lot. It tells me that with a take profit of 220, even my profit factor is improving. My profit factor is actually my ROI in the system. For every dollar or every pound I invest in the system, I get £1.56. I wish I had a company or whatever that brings such ROI, return on investment, right? So it's very good. So what do you prefer, 1.56 for every dollar, 1.56 cents, or you prefer 1.46? Just tell me in the chat. If you have to choose between a company that gives you 156 cents for every 100 cents you invest, and you have another company, 1.46, more people than myself, what do you prefer to get in return? For every pound you invest, you get £1.46 or £1.56. Okay, obvious, 1.56. So you should be looking for the ones that have higher profit factor, And it's amazing how the trading system, just by putting along a take profit, is increasing the profit factor amazingly. You see that? Right? It's a whole universe. Between 1.46 and 1.64, it's a complete different system. You see? Just by moving one parameter. But there's more things. We have a lot of earnings now, 320%. And originally we had 1.63 with 550 points take profit, right? And 315% profits. And every time we went into the market, we got $36, right? Because I'm optimizing in dollars. Okay, so we need to compare with this. We need to compare the new solutions it's giving me, and we need to compare if it's more optimal. You see, it's stagnated. Basically, it's telling me if you go for 255 pips, of profit, you're doing quite well. The rest is not really improving the earnings. You see, you're pretty much already at the limit. So instead of going for 550 points, this optimization, this manual optimization is telling me just go for 245 or something which has 1.64, 290, or this one is even better, 265. I get the same profit factor, 1.63. And what's the benefit? What's the benefit between exiting the trade at 550 pips? Smart people, answer me this question. What's the benefit between exiting at 550 pips or 265 pips? Who can explain that? Let's remember the trade before, right? We had here a short trade. We were short selling. We had a 33 pips stop loss, right? And we had here 550 points take profit. And it's telling me that if I go for 265 pips, I'm earning the same. Who can explain that? Great. Faisal, you are the only one giving the answers here. So he said, also Paul Pierre, right? I like both answers, actually. I'm going to read them aloud. Faisal said, you don't need to wait long for the profits. Good answer. And Paul Pierre said, less interval while at risk. I love both answers, right? So this is the point. If you are making your money already here, you don't need this part of the trade. And that's what the optimization is telling me right now. So I finished that part, right? I finished to optimize the take profit. You see, it doesn't give me any more. I can already stop it. I can wait till it ends, right? It's still 1 minute to go, but I don't need to. And I remember the results with 550. I'm going to just choose now 265. How do I do that? I double click here. Okay, don't worry about the MetaTrader. You will see the video at home and you can follow up at home, okay? Don't worry, just be attentive to the logic now of optimization, right? And now I'm going to watch how the curve is created. It's quite good still these years, you know, the good years of the crisis. And the report is quite beautiful. I make practically a bit less of money. Same ROI, same profit factor, $36 again, and I'm exiting the trade much earlier. So that's a good choice. So the next thing I'm going to do, I'm going to go back to the slide so we remember the theory, is I start at the very top or at the very bottom. I chose very top in this case, right? I'm going to keep the same sequence of parameters. Now I'm going to go to the stop loss. And once I finish all the parameters, I'm going to start again with take profit and follow with stop loss. I'm not going to change the sequence. Okay? And I'm not choosing just the most winning. I chose also something which has less drawdown. The same drawdown actually, same profit factor, similar curve, but I chose this one because it was less time in risk in the trade. So we chose already. Once I double-clicked and I made the back test, if I go here to the parameters, MetaTrader already took 265 as take profit. You see that? You remember it was 550? I'm exiting the trade much earlier, 265. I know there's new people here. You'll be amazed, but yes, it can be robotized. Everything can be robotized nowadays. And that's what we're doing here with this trading system. And now I'm going to go to the next parameter, and I only optimize one parameter after the other. That's actually the hill climbing optimization, also called manual optimization by us. What's the least stop loss I could have. Some people would put here 2 pips. Does it make sense to have a stop loss 2 pips distance? Does it make sense a stop loss of 2 pips? Traders? Yes or no? No. So I put 12. I don't believe that you can have a stop loss shorter than 12, no matter what you trade. Okay? And what's the maximum stop loss I can afford? I wouldn't put too much risk. Maximally 65. And I'm going to search now for the best stop loss. Originally I had 33. Here is the original value. Okay? 33. And this is what I'm looking for. The best stop loss between, and it's going to test 12 plus 1, 13 plus 1, 14 plus 1, 15 till 65. That's the range, start, step, stop, that it's going to test over 11 years. And there you go. Spread optimization started. Great. I go here. I try to have also the negative values to watch them. So I don't click this like I unclick this here. Skip useless results. I have it unclicked. So I see the negatives as well. And you know what's the beauty? Look at that. The drawdown got reduced dramatically. With a shorter stop loss, instead of risking 22%, we were risking before. Watch that. We were here at 22% drawdown, right? I just divide by 100 every time. So it's a 22.6% drawdown, right? If you have problems with that, there's videos on that, okay? How it's calculated. I just divide by 100. I move the comma twice. And right here, I have 18% drawdown, 16% drawdown. And as I increase the stop loss, the drawdown increases, right? For similar earnings, 259%, okay, this is more earnings. 29% drawdown is unacceptable. Everything beyond 23%, I either need to reduce the lot size or do something with the parameters, but the maximum we will accept as traders is a 23% drawdown. This is explained in our lectures, actually. And if you're new to this, you should come to one of our lectures. It's in the videos as well, in one of our videos here. So I ordered by earnings. 32 is quite good. Of course, it's more earnings, but now it's not such an easy decision. Here, 32 is a very good stop loss. It's better than 33, you see. It makes more money. And 32 is as good as, or even better than 37. So between 32 and 37, which one would you choose? Just by earnings. If you earn the same with a stop loss of 32, yes, right, 32. Why would you choose 37 if you make the same earnings? And that's the beauty of trading systems, right? You can optimize. Look, even a stop loss of 42, it's really a loser. It's amazing. Lower risk. Lower risk and higher volume. You could put a higher lot size. You could put a higher bet size. Instead of betting 0.26 pences per trade, you could bet maybe 0.30. You could also do that, right? I think I'm going to stop here. It makes no sense to put the stop loss further, and I'm seeing it really makes no sense. It's called the hill climbing algorithm or manual optimization because it's like climbing a hill, right? And climbing down. Okay, so you want to be on the cream, but you're not looking only at the earnings. So I'm going to stop this. Stop loss of this value is telling me 55 pips. It's going up. Wow. I have another maximum, another mountain here. Well, it's a little hill. Okay, whatever. I'm going to stop it. And now I can order by earnings, or I can do something else. I can order by profit factor. I can order by profit factor and see, wow, there's incredible results here. The curve is going to be more straight. And for example, this one is quite beautiful. And you would say, wow, but the stop loss is too close by. Well, you know what? You need to test it on the market. It's many trades are going to go against you. If you put the stop loss at 13, many trades are going to go against you, that's for sure. But as I said, you can do one set of parameters with a stop loss of 13, right? And you can write down another choice and do it later. Okay? Yes, of course the profit is lower. It's 241%. But the risk is so low now. You see, even the drawdown is much lower. This is tested on the market. Don't have prefixed ideas. This is the problem that when people optimize, they say, oh, I need just to earn a lot. And no, do one set of parameters with a stop loss of 13 and do another set of parameters with a stop loss of whatever. Maybe not 17, but something different, which is better than 33. That was the original value. Between 33, this is the benchmark. Everything that makes more money than this, you order by profit, and you mark the original value, 33. For example, 32 is better than 33, but it has more drawdown. You see, 3% more drawdown. So if you have to choose something around 33, I would probably stay at 33. Although I have a 10% more here over 11 years, it's a 1% yearly, right? I would stay at 33 here. So maybe I'm looking in other direction. I'm going to order by profit factor to make a more efficient system, right? And I either choose 13 or I'm going to choose 24. It has a good profit factor. And every choice leads you in another solution. I'm going to choose a stop loss of 24, right? Double click here. I'm going to watch the graph, make a snapshot in my mind of how it looks. I'm going to watch the report, make a snapshot of the values, right? I always read reports diagonally, like this, like this, like this. Average earning trade makes 3%, 2.92%, but I only earn 31% of the times. But if I earn a 3%, which is great money, right? The streak, 18%, that's how I read the report. So I remember these figures, and I remember a stop loss was 33. And if I don't remember, I go back in here before I click anything, and I can write it down, and okay, I already chose 24, but there was 33, believe me, there was 33 there. Okay, and I'm going to do the new back test. I'm going to go to graph as it forms. You see, there's more streaks of losing, but it's quite beautiful, the curve. You see, it's different. Oops, that I don't like 26% drawdown. Oh yeah, I had 26%. Okay, I can reduce a little bit the volume. Now I'm going to watch the other one of 13. Okay, and you need to watch everything. If you have doubts, you don't need to be in a hurry. You know what? I prefer it. I'm going to choose the stop loss, which is very tight. Look the risk, how it went down. I was risking before like $60 or 60 pounds every time. Right now I'm risking on average 33. You see, I earn less. I'm only 17% of the times right. But when I'm right, I make this at my risk. This ratio is much better. For every $33 a risk, I make $286. And there is not a unique answer, right? Some people here would choose one, some people choose the other one, right? So I'm going to go real fast now. And I stay with the 13, okay? This is my choice right now. And I'm going to go to the next parameter because we're getting short of time. And I'm going to start optimizing the trailing. What this parameter means is what is the biggest jump in the trailing. So I would start at least with 5 pips. It's denominated in pipettes, right? And I would say in steps of 2, that means in steps of 0.2, that's the jump, the maximal jump of the trailing, right? I would allow it to have jumps of 40 pips. You know? It depends on a formula with ATR on the volatility, but that's what's the maximal jump it can take. And I'm going to optimize the trailing stop. The jumps, right? The moves of the stop loss. What it means basically, this parameter, just show you real quick, is we don't go directly from the entry point here. I'm going to put it here in gray, and I'm going to put the stop loss here. The short trade we did before, you remember? And I'm going to put the take profit, which is the maximum exit point here in green. That's take profit. This is stop loss. Gray is entry, right? I recommend you use really always the same colors, okay? So the thing is that this moves the stop loss 1 time, 2 times, 3 times, 4 times. You saw it, right? To secure my trade, but it doesn't move it like this. 10, 10, 10, and 10. It sometimes moves the stop loss 10 points. You see here, this is 10, sometimes 20, sometimes 1 pip, sometimes 2 pips, sometimes 5 pips. You see, and this parameter is telling me what's the maximum jump, what's the maximum bite. Okay, and the maximum bite was at 15 pips, and I'm changing it now. And I'm telling him, and it says, oh, 7 pips is a better buy jump for the euro dollar, depending on the volatility, than, for example, a buy jump of 5 pips maximally, because it doesn't allow me to eat the market properly. I don't know if you understand what I'm saying. It's a dynamic trailing stop. It's a beautiful formula, and it's jumping dynamically. Okay, so here we go, and we have jumps. For example, 10 pips is better, and it's very good drawdown, you know. So I'm going to still optimize this. It's still going up, and originally it was 17 pips. I need to have a bit of patience on that one. I think we're not going to manage to do this webinar in 1 hour, so I hope you have a bit of patience and stay 15 minutes more or 20 minutes more with me, if you guys are okay with that, because I need to do all the parameters at least 1 round, right? Otherwise, at home, there's no way you're going to understand what you're doing. So this is the thing. So we're going to stay 20 minutes more here. Questions, because I have a little bit of time till it finishes to optimize the trailing stop, the maximal trailing stop. Any questions? Did you understand what we're doing now? It's like the jumps, right? It's moving the trailing stop, sometimes 1 pip, sometimes 1.5 pips, sometimes 5 pips, sometimes 7, sometimes 8, sometimes 15, and the maximal bite, that's what we are optimizing now. That's clear. Questions? Okay, so if there's no questions, I'm going to start with my poll very quickly. I don't know if you see that. You see the poll? You can have multiple choice. You can choose all 5. Tell me what you want to hear about. Great. Everybody, when you're done, you can put in the chat you're done. I'm going to leave it for 1 minute. And I'm going to show the results after. There's only 13% who voted. The rest are daydreaming or what? Please vote. We cannot stay here forever for the voting. A lot of people didn't vote. It's up to you. I can organize any kind of webinars. I can talk about anything and everything. So please vote. Only 40% voted. Please a bit more of proactivity. 53%. Come on, the poll is closing. Let's vote. There's a lot of people not voting. Only 53%, 60%. Come on, let's get to 70, 80% of the voters, like a usual voting day, and that's it, and I close the voting. Let's vote. Let's vote. I'm not going to say who's the runner. Let's vote. Somebody else vote? Only 67% of the people voted. Let's get to 70%. Just a couple people to vote. Okay, there we go. I close the poll. Okay, I'm going to try to share it. 1 second, so you see that. Well, actually, I can tell you 60% wants to hear about trading system families. Oops, I lost it. 40% about optimization, 40% about concrete manual trading systems, and only 30% want to hear about coefficients on my FX book. So the winner is trading system families, and that's what we will be talking about next week, okay? To distinguish clearly what is a trend system, what is a breakout system, right? The differences in analysis of these different families, okay? So that's what people chose, and that's great. I can share it now. 1 second. This is the voting results. Do you see them? Yeah. Paul, it's just about trading families, like to distinguish. Yeah, showing now. Perfect, yeah. Okay, great. So it was very good with the poll, and we are back to the webinar. There we go. And it finished optimizing. It doesn't make much right now, and it tells me that bytes of 14 pips are actually pretty much earning the same as bytes of 22 pips, right? I would say this is like the point of, we call it the point of saturation. That's the point really where we found an optimum, because there's not much difference between this and this, right? Pretty much earning the same, and it's like there's no more mountain, right? So we could choose something here, or something here, or even something here, depending on the drawdown and other conditions. So let's watch what is this. What is the results here? It's something around 14 pips, 140 pipettes, right? So it says the maximum byte, optimal byte for this stop loss and these conditions. It was maximal trail. Of course, these are earning more, but it was around 14. Something like this is quite good. 1.80. You see, it's very good profit factor. 243%, very little drawdown, right? And that's what I'm going to choose, right? I'm going to watch what I had before. 79, I improved on that end. 241%, and now I have 243%. It's 2% more. It's a little improvement, but it's a good improvement. And I'm going to choose this one, 144. Of course, I do it very fast because it's too many years, and you need to practice. You need to practice doing this in order to choose right parameters. And I'm going to launch the back test, and I'm going to watch it now. And there we go. It's quite a good curve one more time. The risk is only 16% now, and I earned $287 when I earn, which is only 17% of the times. It's going to be tough psychologically because 80% of the times I'm going to be losing. But once I hit, I really hit it well, right? Okay. And then the next parameter is the minimum byte. It says if you want to move the stop loss, minimally move it 1.2 pips. Well, I'm going to start here with 1 pipette, which is 0.1 pips, and I would say minimally move it 5 pips. That's the minimum byte, okay? I'm going to optimize it now. Originally it was 12, which is 1.2 pips, right? There we go. And we have a little bit of time while it optimizes to talk. Some people get bored when it takes time. I saw it here. 1 or 2 people left. They were not patient enough. Believe me, in automated trading and in trading, everything is about patience. You shouldn't be in a hurry, actually, and you should love figures, and you should love to deal with MetaTrader and stuff. The other choice is be in front of the screen all your life. So up to you. Okay, so here we go, and it doesn't do anything right now. It doesn't make a difference, right? It didn't get started. It's like dead. It doesn't make any difference. If the minimum byte is 1 pip or 0.1 pips, you get the same value, which is interesting, but we need to test it. When these things happen that it's stagnated, next time you're not going to start at 1, the value 1, you're going to start at where things change actually, right? So there we go, and it's not making anything. So this minimum byte is actually not affecting my earnings. It happens sometimes, or it's going to be starting later because we changed the maximum byte, and it may change the logic, how it's working, the internal logic. And if it doesn't do anything, then nothing. I don't change it. Let's wait a little bit. What is the minimum byte? You asked me, it's like, what's the minimum move of the trailing stop, right? Like we had here in this example. I didn't see your question, sorry. Like it was moving here differently, you know, it was moving here 10 pips, 1 pip. So this would be now the minimum byte, this 1 pip here, right? It moved very little here, from here to here. I don't know if you appreciate it. I put like a stop loss. I'm going to draw it again. Like this is the entry point, and then it moves into earnings. This is the stop loss, right? And it moves, I'm going to draw it one more time. This is the original trade. This is the entry point. This is the stop loss, which is now at 13 points. This is the stop loss, 13. And the take profit is 265. It would be actually much further if I draw it properly, but it's okay. So the first time it moves the stop loss here, and then let's say, for example, here it moves the stop loss 5 pips, which here would be 50 because I'm denominating it in pipettes, the values, and then the next time it moves 9 pips, and then the next time it only moves 1 pip, which is 10. This is the minimum byte. What is the shortest move of the stop loss that I will accept within my trailing? What's the minimum that they need to move the stop loss in pips that they move it? Because maybe it doesn't make any sense just to move it 1 pip, right? So this is what I'm optimizing now. The minimum move, you will see it now actually when it doesn't make a really big difference. It starts only at the very end, you see, with 5 pips. It starts only with 5 pips. You see that, right? So I need to continue this optimization because it started to move now. And that's the good thing about MetaTrader. I just need to put here add more values. I'd say, okay, then let's try till 10 pips, right? And once I do it, it keeps in memory everything it did, you see? It doesn't need to redo it. And it continues from here. So this is really very convenient. And there we go. 5 pips is better, 5.2 pips, 5.3, 5.1 is better than 5 pips. That's the minimum move of the stop loss. It means minimally I will move it 5.1 pips. If I move the stop loss in my favor, of course, always in my favor, because this is a trailing stop, the minimal move will be 5.1. That's what it says, 5.1. Okay, so that's it. I'm going to wait a little bit more to see if it goes a bit. It doesn't change much, but some parameters may bring you a lot of money, some parameters don't. Still, you need to optimize them. It says now 6.1 pips is better. Drawdown is the same, but earnings is a bit better, right? Originally it was whatever, and this is a better thing, and it seems like it goes a little bit down. It's not making much, and I'm going to stop it, and I'm going to choose the best one here in earnings, which is 6.1 pips. I'm going to choose it. I'm going to watch my graph one more time. Watch my report, 243%, 1.80, 245%. That's better. 2% more. But it all adds up. You can see 1 drop plus 1 drop makes a rain. So now the minimal byte will be 6 pips. The minimal move of the stop loss will be 6 pips. It has a formula. It multiplies this by the volatility. Okay, next parameter. Next parameter is the moving average, and you will see it's very strange. It's this one, but it means that it's just to check if we are below in a trend really or not. And with value 1, it's the best value in the euro dollar. You will see the other values make no sense, but I'm going to optimize it. We lose a lot of money and we get a lot of drawdown. So I'm not going to really change it, but I need to show you that I'm optimizing it. You see? it's like, this could be okay, but we lose a lot of efficiency, right? It's like making only 1.39 pounds for every pound I invest, and this makes 1.80. For me, it's clear the choice. Even the drawdowns, some are very ugly when I put a longer moving average. So this actually makes not much sense, this parameter, and the best one was 1. Let me delete this. So it stays, okay? You will not manage to move it in the euro dollar. If you're using other currency pairs, it will be interesting. The ATR is the volatility. It will move the trading stop depending on the volatility, and I'm going to optimize it here within this range. Okay. And you see, that's 2 periods of 5 candles, which makes no sense. It's too little, and it starts to become interesting after 4 candles of, this is the volatility of the last 20 minutes, right? This is the volatility of the last 30 minutes, 6 times 5, right? It's measuring the formula of the last X periods of 5 minutes, because I'm optimizing on the 5-minute chart, right? And it's telling me what was the volatility of the last 5 times so many periods of volatility, right? And it's quite interesting. It changes a lot. You see that? 10, the last 50 minutes, it's the best one as far. And we need to wait a little bit on this one. Wow, and suddenly it has a slump here, and it really jumps up. 17, 18, 19. But the funny part is not linear. You see that? So sometimes it's good to take a longer period to measure the volatility of the last so many minutes. Sometimes it's better to measure the volatility, and it's not linear. And you would believe this would be linear, and it's not. And this is a very interesting result. This parameter is quite important. Wow! Look at that. Look at the drawdown. Look at the profit factor. You need to train your eyes. You need to train your eyes so that I see this immediately. I was making 1.8 return on my investment. I see 1.95. This means I get almost $2 for every dollar I put in this strategy. Would you buy it? Get it for free, actually. But it's amazing, right? And you believe the results were good originally, and everything can be improved through optimization. And look at that. I was making 245%, and now I would be making 253% with much more increased efficiency for every dollar I invest, what my return is, and much lower drawdown. Just because I'm watching at another period of volatility. Let me order this one more time. Maybe we have even better results. That's the best one, 25. This is here, and that's going to be it. I'm going to choose this value. Okay, 25 times 5 minutes, how many hours is that? Who can help me with that? 125 minutes is the volatility of the last 2 hours and 5 minutes, right? It checks the volatility of the last 2 hours and 5 minutes, because it's 25 times 5 is 125, right? Minutes. So it's telling me the best way to watch that volatility to move the trailing stop is the last 2 hours and 5 minutes. Why? I don't know. It's like this in the euro dollar. And I don't care. I don't have any prejudices. I just take it because it's such an improvement. And you will see it now in the curve. It's really a jump. It's a quantum leap. Let's take it. Do you understand? We are 2 layers above. We're not watching the price. We are not watching the trading system. We are watching the parameters of the trading system on the market over 11 years. There is not even a discussion about it. This is 11 years of truth. Okay? It's not an opinion. And it's amazing. It's only 14%. The risk is really hilariously low. Yes, the profit dropped, Faisal, but I'm earning more securely. You know, when you start in trading, you want to make more money. I understand it was making 330%. But you know what? I prefer a stop loss at 13. I prefer that for every dollar I get almost $2, you see, and trade both. Trade the original setup. You still have it in the robot. I think you got the robot. And trade this one and put them both in the market. I'm going to show you in the slide. And let the market tell you in a couple of months in demo, 1 month in demo, you will know what is better for you. Right? But it's a beauty. It's like $1.95 for every dollar I invest, I take it. Okay. So next parameter. Next parameter is the multiplier. And you know what? We're going to get to 300% anyway. So this is how much I multiply. It's like the ATR, the value it has. I just have a formula inside. I cannot explain you the formula because that's part of the secret of the system. I'm going to multiply this by a multiplier in order to move the stop loss, right? It has an internal formula. What I like is the graph. Look how straight I'm getting, and it's a trend system. Of course, this period was bad, but I get an angle like this. Of course, that these were the crazy years, 2008, 2009, right? But still very good, still very stable till 2016. Pretty much the same curve. And that's what I watch because I also watch very much the last year. Okay, so here we go, the next parameter, and I need to close in on this one because we are a little bit over time. And if not, I'm going to continue the next day with this. We're going to make a vote if you want me to continue with this or we start with trading system families. There we go, the multiplier. We are here. For instance, I prefer this. Every 1% I reduce the risk. It's like you said, okay, originally we had a 23% drawdown. Let me draw this. Because many people really don't understand the difference in the drawdown. And they say, oh, it's the same. It's not a big difference. Well, it is. Let's imagine you had here whatever capital curve, and you had here a dip of 23%. This was the original dip we had, right? And right now we are having a dip of only 15%, which is around here, right? So in the new curve, in the worst of the cases, in the bad year, I don't know when it was, when it had this dip, we only have a 15% drawdown. You see, it's only an 8% difference. Well, it's not, because it's exponential. Once you go in the dip this far, it's dramatically more difficult to return from there than to go in this dip this far and return from here. And this for me is so much more important than losing even 100% earnings over 11 years. You see, because I want to trade securely. I trade institutionally. You see, if you're trading your $2,000 account, it doesn't matter whether you lose 460 pounds or 300 pounds, right? It doesn't make a big difference to you. But believe me, if you're trading millions, it's not the same to lose 230,000 than to lose 150,000. You see that? Right? So you should always consider the drawdown as paramount. Every cut in 1% you can do on the drawdown is not equivalent to every earning in 10% earning. You see that? They are not the same. Every cut in drawdowns is dramatically important. Right? Okay, so what do we got here? 253% and 256%, I take it. 13% drawdown and 14% drawdown, I take it. I reduce the drawdown 1% and I increase my earnings 3%. There we go. Let's make the back test. I wish I would have recorded the original back test so we could compare them both now. The curve is even more straight in my view, slightly better. 1.96, 1 more cent, it all adds up, right? Next parameter, This I'm not going to optimize because it actually doesn't make much. What it tells us, when do I start to move the trailing? Only after the 300 minutes, only after the first 5 hours I move the trailing. Independently on what happened, I'm not going to move the stop loss only after 5 hours. Okay, so if you put here 120, it's going to start moving the trailing after 2 hours. If you put here 240, it's going to start moving the trailing after 4 hours. So it doesn't really make a big difference, believe me. So I'm going to jump on this parameter, and I'm going to go to the next one, which also has to do with the trailing, but I am sorry, I cannot explain what it means because I cannot cover all the rules of the system. So it's basically when it starts, but depending on some internal calculations, okay? So let's start with this one. And let's see if we get an improvement. The main thing, even if you wouldn't understand what the system does exactly, you can make money with the systems because you really have a control on the optimization. And this is crucial. Well, the question is, which is my favorite trading system? I don't understand the question, Faisal. Do you mean trading family? If you prefer training or scalping, do you mean a commercial name? Or what exactly do you mean by this question? Style of trading? Both? Okay. So I prefer personally scalping because I'm kind of a nervous personality and I like fast things. But for example, this trend system, I really love to trade it. It stays in the market 3 days, 5 days. Not so much my personality, but believe me, when you make 3% in one trade, you're happy. So with the years, I started not having chances. To be honest, I started trading everything. I put it in the portfolio, I make a good mix, and I would trade everything, right? But originally, it was a scalper. Commercial names, there's a lot of good trading systems. For example, Wall Street Forex Robot, it's a very good trading system, and many others. If you want just one name, I would take that one, right? But I would optimize it myself. I would not just take the system from factory and that's it. I would re-optimize it completely the way we're doing it now. You see? Okay, so we have one more parameter, 2 more parameters to go. A bit of theory, and we're going to close in. It's going to be a bit longer today, I'm sorry, but I think it's good info. There we go. It's going up the hill, right? This is important. And not only the earnings, this is the earnings. Why is it 22,000? Because the original capital was 10 grand, right? This is the original capital plus the earnings. So it can go below 10,000, yes. Sometimes the system can go below 10,000. It loses money. Yeah, it can happen. But everything makes money, okay? As a matter of fact, if you make your own trading systems, majority of them, once you optimize, they will start below the original capital. They will start losing you money because you lack the knowledge. You don't know really how to combine indicators, how to make the trading systems. You need a lot of education to know exactly what makes money in a trend system, what makes money in a breakout system, what makes money in a scalper, in ranges, what indicators work best for a scalper, for example. Many people don't know that. Or what, for example, right now in a trend system, the main thing in a trend system is one thing, the exit. I don't care where I enter because I always enter late. But if I have a good exit, if I know when to leave the trend, how many people were in the stock market lately and they didn't see it coming, that it was going to become so bearish with China and so on? They didn't exit, right? They just bought, but they didn't know when to exit. In a trend system, exit. You need to tattoo yourself. These two concepts go together. Trend system equals good exit. Period. That's what we're doing now. What is a good exit? A smart trailing stop. Isn't it? Look the beauty. If I change one parameter in the trailing stop, I can earn only 70% or I can earn 190% just because I move one parameter in the exit. People don't know that. They say, oh, trend systems. No, trend systems, exit. Scalpers, entry. But this I'm going to explain another day, right? So it's very important you know the trading families. It's good you chose that for webinars. Because you need to know when you're trending, work out an extremely good exit. And actually, you should have as well good position management, which is actually trailing stop, which is another way of exiting, right? Look, it's almost linear. Just one parameter of a trailing stop. It's never ending earnings. We got there with a much shorter stop loss. We are there. You were impatient, guys. You wanted, oh, I earn less money. Well, we are not in the same earnings, but you know what? Look at the stop. Look at the drawdown. If you let me choose between a 15% drawdown and an 11% drawdown, my choice is clear. I told in mortgage, the thing you're dealing with, you need to trade psychologically as if you were trading a 2 million account from the Russian mafia. Seriously. It's not a joke. You need to consider the capital with such seriousness. Because you don't consider your capital as important, and it is. It costs you a lot of money to earn it. And you're bringing it from your job or whatever. Why Russian mafia? Because if you have a big drawdown, what happens with the Russian mafia? Imagine you lose 50% on 2 million to the Russian mafia. What do you think would happen, Faisal? Would they knock your door? It's almost like a joke, you understand? But they will hunt you. Exactly. You got it, right? So take it seriously, the drawdown. Yes, many people would have chosen other ways of optimizing. I know. Oh, it's almost done, this parameter, right? But I wouldn't. I look at the drawdown. I love this one. 11% drawdown. I love it. It earns 6% less, but it's only 11. It's beautiful. 11% drawdown. We were starting at 23% drawdown when we started this practical. You will see it in the video. Watch it one more time or 2 times. You need to grasp how I do it. You know, because in the end what matters is the drawdown. Believe me, it doesn't matter. You will make money sooner or later in trading. It's a thing of persistence. Believe me, it's a thing of years. It's a thing of hours. But if you don't have a control, if you don't have a real risk management, look, I don't like that anymore. It jumps already. Yes, it makes more money, but the drawdown, it's jumping. I don't like this 2%. Why? Because I'm going to have many trading systems. That's just one. I'm going to add like a soccer team. I told you in the one mortgage. I'm going to add 11 of those together. So that's my choice. 17 pips trailing start. 170. The value 170. Oh, I didn't make the mental image of the graph, but we make now the new one. There we go. 11% drawdown. And every time I earn now, I make 3.1%. And I was making $280. Now I make $313. It's much better. Every earning is much more. There's even one case, one time I make 22% in a streak. I make 2,000 out of 10,000 in 6 trades. But of course that's just once over the 11 years. But that's a beautiful thing, right? Now I only have a streak of 10% and it was 15% before. This takes time, but you need to get used to backtesting, professional backtesting. I'm taking 11 years. I'm not lying to myself, right? Last parameter, and then we're going to watch one of the beautiful trades. There was one here. Look at this one. 10th of February 2002, trailing stop, moving, 5%. One trade. Let's look at that really beautiful trade. Let's look at the best trade here. A lot of trades that lose $30, right? And the best trade makes almost 7%. Right? You can watch it now. Actually, you can go to this date, put yourself exactly before that, make the visual mode, right? You need to play with the tool. It's for free, MetaTrader. Come on. I mean, It's checking 813,000 candles. You serious? It's incredible. For free. Checking 813,000 times in less than half a second. Do I enter the trade? Do I exit the trade? Do I move the stop loss? It's incredible. It's incredibly fast. I don't like it because it's beautiful, because it's mega ugly. MetaTrader is one of the ugliest platforms you could ever find, actually. No, but it's very fast. It's very fast in optimizing. It started with the whole expert advisor thing, with the robotization, right? And that's what I like about it. So I'm going to finish with the last parameter, and I'm going to end up the webinar with a bit of theory, and we're going to go home or for dinner. I hope you had dinner already. So there we go. Last parameter, and you can ask some questions now, and we're going to get wrapping up soon. So once I have done all the parameters, I'm going to explain the theory meanwhile. You are doing this at least 2 rounds. Okay, you start with the parameters from top to bottom in this case, and you do minimally 2 rounds, sometimes even 3 rounds. You squeeze the orange, you squeeze the orange, you squeeze the orange, then you show your picture, you squeeze the orange, and when you have a good orange, for instance a Spanish orange or whatever, you can squeeze it 3 rounds and you still get juice, right? If you do it manually. Today we do this with electronical squeezing devices, right? But I'm talking manually. So a good trading system, you'll get juice after 2-3 rounds still. Okay, a very weak trading system with 1 round, you will be done. Okay, so squeeze the orange twice at least. Second recommendation, that's the tips, right? Okay, 2 different sets for the same pair, same time frame. Right now we have a stop loss of 13. It's too tight, I agree. We can have another result of a stop loss of 26. We can do another one of a stop loss of 33 and put all of this against each other in the market. Put them all to trade, all 3 of them. Okay, check the last period. We're going to do this now. And do a lot of sets. Don't do just one. Do 1, 2, 3, 4, as many as you can and as many as you want. And once you put them for trading, use a unique magic number for every setting, so the robot doesn't get confused what it's trading. Let's say you make the setting number 1 with the stop loss 13, you'll put in magic number 10. To this, you'll put it magic number 11, magic number 12. It's finished. You heard the optimization, and you are simply, once you trade it, which was shown on the other video the other day, we explained how to trade it. You're going to go here, and it's going to tell you what is the magic number of the second strategy, right? You're going to put your numbers, which you choose, right? So you're going to say, okay, setting number 100 is the stop loss 13. Setting number 101 is the stop loss 33. Setting 103 is another setting which I did, which modified more the trailing stop, and this is another one. If you don't do this, one robot is going to close the trade of another robot. Imagine this is like you have independent traders. You have one trader which is watching for opportunities in the euro dollar, in M5, in the same robot, but just with tighter stop losses, right? And another one is watching with longer stop losses. The other one is watching with another trailing stop, and everyone has to have a unique number. If you don't do this, everything we did today loses its value. So at the end, what you're going to have is you're going to have in your trading account, you're going to have a period. That's in another video, but just so you understand the end result, you're going to have a euro dollar always M5 because you optimize in M5. You're going to put the robot here, right? This is the robot. You're going to put one robot with the setting that you found, which was the stop loss 13, and this robot is going to have the magic number, whichever, magic number 101. And then you're going to put in another window, another trader, which is going to trade on the same time frame, same robot, different setting. You got that? And it's going to trade here with a stop loss 26. right? And then you are going to have even another trader, and you're going to test all three in the very same market, in the very same days, in the very same month. And the market is going to tell you which one is better for you. You follow? And this is very important because many people, even professional programmers, when they optimize, they do only one set. And this is a very big mistake. I just did only one, right? But I remember that the stop loss 33 was beautiful. And Faisal will remember it made 330%. He will prefer it. Well, I don't have preferences. I will check with the real market. This is only a back test. The real market which will tell me which one is the best. In a couple of months I will know in demo. 1 month maybe is enough, right? So very important, do lots of sets and use everyone with a different magic number. That's to close the webinar of today, because if you don't do this, then you will be pretty lost, because every window will trade the trade of the other guy. This is one trader. This is trader 101. This trader, and he has a unique number. I even put it here. I go here and I write it here, right? I come here and I put here a tag. I don't find it now, but I would write here 101, right? And I go to the other one, right? And I would write here 102. This is my trader 102. So I don't get confused. You follow? This is very important. How many of them in a demo account? Endless. It's for free demo money. Okay? Experiment as much as you can and want. In the real account, only the good ones. Only the good ones that went through the demo. Okay, so it's very safe to trade with automated systems when you know what you do. People just buy the robot, install it, put it up there, they don't optimize, and they believe they will make money. How come? You didn't even know how is the back test. You didn't even improve it by yourself. There's no way you're going to make money long term. Maybe if you're lucky only. Okay, so the last parameter, I can choose trailing step 14 or this one. Either way. Drawdown is very little difference, right? Or this one, which is a smaller drawdown, but it's a very little difference between 11.77% drawdown and 11.46 drawdown. It's a very little difference, and it's 2% more earnings. I'm going to go for this one. Okay, this is my setting for the first round. I need to do now my second round, right? And after that, this is what I need to put up here. These parameters, I need to put them up here, and I can save the setting now, and this is what I'm going to do, and I'm going to call it setting 101 robot T2F, right? A strategy 2 or trend side of the system, right? Stop loss 13, very tight. I can put any commands. I can make it as long as I want. So far that I remember, since, don't put commas, since 2005 till 2016, so it's a lot of years. I put the setting here, right? And I can upload it immediately up here. I go here, robot properties, I load the setting. Oops, I didn't save it in the right spot. Okay, let me save it in the right spot because I don't know where it was. Save, it's in the tester. Okay, it's in the tester folder. So, expert advisors, properties, I load my setting here in the tester folder. It's gonna be on files, no, tester, it's one up, okay, tester, there you go, 101. Click, and there is my parameters, magic. Look at that. I don't need to type. Stop loss 13, take profit 265, maximal trailing 14.4 pips. You remember, that's what we did just now. And there you go, I can trade. Okay, this is a very complicated question, Faisal. Why not start with genetic? I cannot solve it today. It's very long to answer. Paul Pierre-Louis, Is there a maximum that you would change your benchmark parameters in order to avoid curve fitting? Or would you go for optimal settings every time because you're using a very large data set? Very good question, Paul. Very good question. He's basically asking if I should avoid too much improvement, and the answer is the second question. He answered to himself. There is no curve fitting because I'm checking 800,000 candles. You know, and I have only 12 parameters. There is no way that I can curve fit. I can curve fit if I only optimize 3 months or 1 year. But the market changed so much since 2005. Everybody will agree here. There is no way I can curve fit. I need to close in because we're really very long over time. Just to say just very quickly, we are having this course starting on the 20th of February. You still can join if you think you understand what we are doing. Just drop us an email, right? And to this email. Okay, we are going to have webinars next week starting on Tuesday. We're going to send you an email. The other thing, we have an event going on in London. I'm going to put you here how to get the Amazon VPS. That takes too long, Eric. And I think, I don't know if you're acquainted with IT stuff and so on. Just get the free Amazon thing, and it would take really more than 1 hour. And I don't think there's so much value in explaining really how to get a VPS in Amazon. It's very simple, really. Just follow the steps. Okay, so this is the next event. It's going to be on the 12th of March. You're welcome to come, even if you were before. I never repeat an event. I never repeat the same trading system. I never repeat the same explanations. I don't optimize the same robots or maybe the same strategy, or I optimize it from the other direction. So you're welcome to come back again. It's going to be on a Saturday. It's going to be in Kensington, beautiful hotel, by the way, and you're welcome to join us. Okay. You're also welcome to open the live account. If you are a client, I'm going to come to London 2 days before, and if you're already a client, I'll give you a free day in Axie Trader's office, 12 hours for free, but you need to be a client before, and I'm going to give you the link for that. This means you need to have funded your account and started to trade. Okay, then I'm going to give you a free full day on the 11th of March. That's also additional. And I think that's very much it. I'm going to be in London as well on the 19th of February. There is an expo. It's the Forex show in London. So we're going to send you an email as well, and you can join us. And I'm going to be talking about the trading myths, the myths on trading, and I think you should come over and meet us in person. So that's pretty much it. Meet you next week, okay? And I have a small survey at the very end, how you like the webinar. Please fill it out. It takes you less than 1 minute just to get a bit of feedback. And we'll upload this video, I think, in a couple of days in our YouTube channel. So you can revisit the video, you can review it as many times as you want, so you really get a grasp on the optimization process, and you have a clear view why I chose these parameters, why I didn't choose the most winning one. Okay, so that's it for now. If there is one more question, I can answer it, and if not, we just finish for today. So is there some question around? No questions? Great. Okay, so it was a bit long, but I think it was worth, and just stay a little bit, you'll get the survey on the screen. Okay, and hope to see you next week. And we'll be talking about trading system families. That was the most chosen one by the group today. Okay, see you next week. Have a good weekend, and see you soon.